I think CreditSights is in a unique position to be able to come at the macro question from a different angle. I think we have, as a research shop, we develop our thought process in a top-down and bottom-up way. And what that means is that we have analysts covering most major sectors around the globe, and they are listening to most of the management teams talk about what they're seeing in the economies. They're modeling out the numbers of most of the largest players, because it's the largest players that tend to be the bond issuers. And we can cover more of them from the credit angle than you really can from an equity angle. So we actually have a pretty good insight into most of the economy from a bottom-up perspective, and we use those thoughts to try to coalesce through our strategists into a macro view. As single name analysts, we spend most of our time with our counterparts in the market who are focused on the single name outlook for credits and relative value. But our clients, the largest banks and the largest money managers in the world, have the full range of responsibilities within the firm. So the research we write on the macro side and on the strategy side, which is driven largely by those conversations and those models with the single name analysts, are read more by the portfolio managers and the broader risk managers and the traders who think about high beta unwind versus compression and those broader trends.
There's an awful lot of uncertainty with MiFID II and unbundling and how that's going to affect credit research in particular, and it seems to be one of the areas that there's most discussion about at the political and the regulatory level. As far as we're concerned, long term this should be good for independent research providers like ourselves, because the market is really moving to the pricing model we already have, where we charge for subscriptions and for access to our research. It's going to be a very important change for the market as a whole. Asset managers will need to evaluate research in a different way. The sell side will have to decide how to unbundle and whether they're going to sell research separately. I think in the end it's going to make it more difficult for people to sell credit research, and for the likes of established players as ourselves, this should be a positive move in terms of the research that we offer.
It's going to create worse liquidity in the marketplace. It's going to widen bid offers for smaller size. It's not going to contract bid offers, not for the research-intensive situations that really need the additional information. It's also going to lower the confidence of Wall Street. They're not going to be able to even create market-making exemption appropriate bid offers in size. So there'll be wider bid offers for troubled names, and that's going to mean more defaults, and that's going to mean more pain for what I call the real money sector, which is the pensions, the insurance companies, the mutual funds, the savers. This isn't hedge funds gunslinging in the derivative markets. We're talking about real money asset managers who operate on the other side of the liability structures of the backbone of, certainly in the US, of corporate America. As far as the European crackdowns on research go, you have record numbers of issuers, you have record amounts of outstanding, you have all-time highs in medium grade and high-risk sectors. If anyone believes that taking information out of the marketplace is going to somehow reward the secondary liquidity of tightened bid offers, that's a theory that I can only be described as cooked up in Shangri-La.
We tend to be able to take a little bit of a longer term view about what areas we might be able to move into over time, and by using effectively our hiring process and our junior training process to be able to move into more areas and to create expertises over time. It's a long game. I think what's happened on the street has probably aided us in that somewhat and made it a little bit easier for us to continue to do that, but I don't think that we drive that at all, and I don't think that it was necessary for us to grow, to develop the research staff that we have. I think that that's something that we play a different role in the market than the sell side does for the buy side and for the sell side, who are big clients of ours as well.